hi guys, welcome to this Moneycontrol live stream. You're watching IPO Watch, and the focus today is on Aadhar Housing Finance, where the 3,000 crore rupee IPO has opened up for subscription. It's a combination of offer for sale as well as fresh issue. The company has raised somewhere around 898 crore rupees via the anchor book, and you have marquee names like Morgan Stanley, CLSA Global investing via the anchor book, and also key domestic names like LIC Mutual Fund, ICICI Pru Mutual Fund and the likes. We're joined by Rishi Anand, who's the MD and CEO of the company, to take us through the expansion plans going forward. Great to have you on the show, Rishi.
Thank you so much.
Congratulations on the IPO, and you have some marquee names, investing via the anchor book. How confident are you that the IPO will sail through?
So till yesterday morning, I'd say we had a lot of butterflies. Yesterday evening, when the list was finally uploaded on the site, not only me, the entire 6,000 people in the company are super excited. Right, so that's how the feeling is. It started to sink in now.
Of course,
and you're right. We've got some marquee names. We've got from, if I were to name a couple of them at the mutual fund level, we have HDFC Mutual Fund, we have ICICI Pru Mutual Fund, we have Axis Mutual Fund, Invesco. Then we have a long list of marquee long only funds, which are international funds like APJ, Watt Ferry, Pickett, Morgan Stanley, you named. On the life insurance side in the country, we have Kotak Life, we have ICICI Pru Life, HDFC Life. So yes, who's there? Right. So that gives us a lot of faith and trust in the business that we've built in.
You were initially looking to raise over 7,000 crore rupees via the IPO, if I'm not mistaken, back in 2021.
21-22. Yes.
What would be the rationale behind reducing the size of the IPO? Because there's so much euphoria around IPOs right now. So why scale down the IPO size? So
21-22, yes, that time the selling shareholders and the management thought that that's the right number. We got an approval from the regulator. We waited out we held the approval card for about a year. We waited out. The markets were not conducive to the requirement of the selling shareholder and the management, the way we felt about the market. So we waited out, and we didn't go to the markets that point in time. Further, we waited out for the markets to be right. And this all comes from a perspective that the private equity fund, which is the strongest global private equity fund, has a very long fund life. We were never in a hurry. I think that is a good indication to the market that the private equity, the current selling shareholders were not in a hurry. They are not in a hurry to shell out large portion of their shareholding. Today, the way we, as you've indicated, 3,000 crores of the IPO size, 2,000 crores goes OFS, 1,000 crores comes as primary to the company, which is, I would say, a very positive indication that the current selling shareholders are not in a hurry. The fund life is about 6 to 7 years more, so that's how it is positioned.
So they will be exiting their stake entirely in 6 to 7 years. That means
the way the private equity funds work is they have a fund life. So as I indicated, the fund life is till about 2030 end. So they have good 6 years to go. At the moment we reach about, I would want to highlight a couple of things here in terms of lock-in period that is regulated by SEBI. Our shareholders have given additional comfort of additional 6 months of lock-in period. So that's one. Second is when we reach the shareholding about 50%, that's the time we will have to take a pause. It has to be a very well thought through process, because you would need a lot of approvals from both the regulators, from all the 37 banking relationships that we have. So it's going to be a very well thought through process and a slow process.
Let's talk about the business now. AUM growth wise, you've seen a very good growth of 20%, in the 9 months of FY23. Any particular reason for that, and is it sustainable?
So I would say, if you look at numbers in the last in the last 3 years, we've maintained an AUM growth of about 20%. Then you would see a blip in year 2023. Which is showing an AUM growth of 16%. That is on account of, if you recall, the government of India had a scheme of Pradhan Mantri Awas Yojana subsidy scheme, and on an average, on a yearly basis, we used to receive a subsidy of 250 crores. For that particular year, in the year when the scheme got closed, we received about 750 crores of subsidy. So if you adjust for the additional 500 crores that we received, our growth was still 20%. Okay. So we've been growing our AUM at 20%. And if I would want to correlate with that on the demand side, the demand side is huge. You're talking about 10 crore plus unit shortfall in the country today, with a 9.5 crore shortfall in the EWS LIG segment that I am dealing in. My 75% of my focus book AUM is in the EWS LIG. So on the demand side, not only the demand but even a lot of government initiatives, right from risk weightages which the regulator looks at us, from various government initiatives. Everything boils down to looking at the kinds of growth that we've given. Right? So.
Also in terms of margins, if you look at FY21, I think it was somewhere around 5.8%, and in the 9 months of FY23, it's I think around 9% or thereabouts. So going forward for FY25, would you be aiming for double-digit margins, because it's almost doubled in 3 years?
We are very close to. So we are 9 months FY23. We have done a NIM of 9%. The major contributor in the NIM happens to be spread plus treasury income. So if you look at the movement of spreads in the last 3 years, we've always been in the range of 5 to 5.7%. That's the range Aadhar operates, and that's a very comfortable range to be in. What actually happened in the 9 months of FY23, the number that we are quoting right now, 9%, was on account of increase in COF, because of which was anticipated, because of which we passed on to the customer in a quarter advance, and the COF increase followed 1 quarter later. So that's the blip that you see. But at the management level, I think anywhere between 8 close to about 8% is a comfortable NIM to maintain.
Right. Also, when it comes to cost of borrowing, it declined from FY21 to FY22, and thereafter it has increased at a slower pace than the kind of repo rate increase we've seen in India in the same period, right? So, any particular strategy that you have deployed to keep cost of funds in check?
So there are 2 or 3 good things that have happened at the organization level. One is we've always focused on long-term funds, right, when it comes to borrowing, and we are very fortunate to create a very balanced funding source. For example, if I can quote some numbers here, 25% of my current borrowing has come from National Housing Bank, which is also my regulator. It gives me refinance. About 18 to 20% comes from NCD, and about 55% comes from banks. So we have created a pool of long-term funds, and you're right, my exit number for 9 months FY23 on COF was 7.9% incremental. So we will continue this with our strategy on borrowing side.
All right. What about operating expenses? I think they've been increasing since FY21. Would you see them settling at the current rate?
I would say yes, that's where we should be. In fact, I would say our OPEX has declined a bit, and we are very comfortable with this kind of OPEX. The reason is very simple. In the kind of customer segment that we cater to, it's a high OPEX business, the branch network that you have to create, you have to reach out to these customers. We have close to about 500 branches now. There is a whole lot of technical evaluation of the property mechanism which is done in-house. There is a whole lot of collection mechanism which is done in-house. We have about 1,000 plus people on the collection side. So it's a high OPEX business. I think the numbers that we've closed 9 months OPEX is a comfortable number to be in.
Also, I've noticed that you guys have been increasing focus on self-employed segment vis-a-vis the employed category, right? Any rationale behind that? Is it a conscious decision?
I would not say it is intentional that we are moving towards self-employed. When we go to, and it has happened by design also. While when we were in larger states in the start of our journey, larger states will contribute more salaried people. The moment you start diversifying your distribution to the smaller states or smaller locations like smaller talukas or smaller districts, that's the current strategy that we've been doing. There you would typically find more self-employed people. So I think it is by because of the growth in our strategy of distribution that, and I will not say it's a major shift from a salaried to self-employed. It's happened over a period of year, 1% a year. Okay. And today also on the book level, we are about 57-58% salaried customers, and the balance is self-employed.
I want to speak to you regarding your expansion plans as well. You've outlined that you are present in 20 states and 533 districts. You have 487 branches.
That's right.
So where does this leave room for expansion? How would you be looking to expand going forward, and where would you be looking at expanding your branches?
Great. So you're right, the numbers are right, 487 branches, 20 states and union territory, no more state to expand. What do we do next? When you touch number of districts, we are in 533 districts out of 806 districts in the country. So that's where the gap is. In terms of pin codes, I am today at 11,000 pin codes out of 18,000 possible pin codes in the states that I operate. And maybe I can illustrate with an example. In Rajasthan today, I have 46 branches. is there a potential of going deep in Rajasthan? Yes, there is. You can go easily up to 70-80 branches. And when we talk about, going further, it is smaller locations. These are smaller talukas, smaller districts, and a strategy at the company we will call them deeper impact. So there are definitely all these states we can go deeper, and phase 1 we will definitely look at 5 or 6 top states to go deeper. That's where the growth will come from.
Right. Just a last question, so to say, you're the largest affordable housing finance player in the country, but you have listed peers also, right?
That's right.
Who do you consider as your closest competitor, and what could be the risk or any risk that you see going forward?
First, on competition, you asked a question, who is my closest competition in terms of numbers? It is Aavas Financiers. We are 20,000 crores of book, they are 16,000 plus crores of book. We've been in the journey together. They also, if I'm right with my dates, they also got their license in 2010. The only difference between them and us is we cater to the same segment, same profile, everything more or less remains same. One is our distribution. We are in 20 states, they are in 13 states. So anybody from a 13 state to a 20 states will take anywhere between 3 to 5 years. I think that is the gap we are addressing. But on a long run, the way we look at industry, and then there are a host of players. There are players in 8,000 to 10,000 category. There are players below 5. Most of them are below 5,000 crores of AUM size. The way we look at it, it's going to be a 2-race horse between Aavas and us. And they've been doing excellent numbers. We've been doing excellent numbers. So, hats off to both of us. And we by far are the largest. So that's how competition is. Okay. You had another question, sorry.
One last question then. In terms of asset quality, are you comfortable at around 1.2 to 1.5% level?
See, in the kind of customer segment we are dealing with, 9 months FY23 number was 1.4%, and if I compare with 9 months FY22, it was 1.8%. So there is a improvement in asset quality, which is dropped from 1.8 to 1.4. But historically, if I were to quote March numbers in the last 3 years, we've been in the range of 1.1 to 1.2%.
Okay.
So we are very comfortably positioned.
All right, I think that's about all the time we have. Thanks a lot for taking out time and sharing your thoughts with us and your expansion plans as well. All the best for the listing.
Thank you so much. Have a good day. Bye-bye.
Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.